Welcome back to the Dividend Diplomats YouTube channel, everyone. Lanny, Bert, the Dividend Diplomats. Everyone, we are pumped up to talk to all of you today about a high-yielding, undervalued dividend growth stock to potentially buy.
That's right, Bert. But in case you haven't already, definitely hit that subscribe button. Give this video a nice thumbs up. We appreciate every like, every subscriber. It's amazing seeing this channel grow and blossom as we present to you dividend stock news, analyses, stock purchases, showing you that we put our money where our mouth is. And Bert, you said it best. We have an insanely high yield dividend stock here to talk about that is showing great signs of undervaluation.
Yeah, before we get into there, though, what has exactly happened in this last week of why we continue finding undervalued dividend stocks? The Monday started off with a bang. The market was down. Everybody was getting excited. I know we were adding some nice dividend stocks and some undervaluation. A lot of people were getting amped up. Check the Twitter feeds. Is this the market finally coming down? Is the market finally going to continue presenting more opportunities? But then, no, Lanny, what happened on Wednesday? And then how did the rest of the week go?
Let's just say we finished the week off at almost back to 4,500 on the S&P 500. The last few days, essentially, you just had a bunch of up days.
Seems like every time the market's getting ready to come down, everything's getting ready to start correcting. The Fed decides to stick their nose in the middle of it and make sure that that doesn't happen.
They just keep roping you back in. But today, Bert, you said in the beginning, we have a high yielding, undervalued dividend stock to talk about, one that has increased dividends for 17 plus years, that yields almost 9%.
Yeah, it's absolutely insane. And they operate in a sector that's going to continue to play a larger part in our lives, especially as the population continues to age. You have more people shifting into the care zone for who's going to get helped by this company. So this 9% dividend yield and this company's earnings can continue to grow and to support that large dividend.
Bert, how did we find this undervalued dividend growth stock to potentially buy right now?
Well, I should say, normally we'd like to say that we found the stock, but there were a lot of commenters on previous videos that tipped us off towards this company. We've known about this dividend stock for years and have always watched it, but the commenters really brought it onto our radar to help us get it into the Dividend Diplomats dividend stock screener, which is where I think you are going with this, Lanny. Our dividend stock screener has three simple metrics here: one, PE ratio less than the S&P 500; two, payout ratio less than 60%; three, history of increasing those dividends, or we'll look at the average dividend growth rate and how many years that dividend has been increased. We'll always throw in a bonus metric too after we get through the first three of the dividend yield.
Exactly. And, the name of the game as we're trying to bring you dividend stock analyses is, you may have cash on the sidelines. You may be on your own personal finance journey. Maybe you're just starting out in dividend investing. You want to know how to start investing or how to start dividend investing. That's where Bert and I, the Dividend Diplomats, are here to come in to help show you not only what dividend stocks that are showing signs of undervaluation to buy now, but how to find those undervalued stocks using our Dividend Diplomat stock screener, as well as what dividend stock moves that we're making here on this channel. So Bert, what industry, what sector does this company play in?
They are a REIT that focuses in the healthcare sector. They operate healthcare facilities. They staff up all of those massive buildings that you see popping up in communities near you. Lanny, let's reveal the company here. Why don't you tell the viewers what company we're going to be talking about today?
Of course, we are talking about none other than Omega Healthcare. Ticker symbol is OHI. And again, as Bert said, they are a REIT or real estate investment trust. So again, treated a little bit differently than your ordinary company. The dividends are taxed at your ordinary income rate versus the capital gains tax rate. So more than likely, dividends received from a REIT are higher on a tax standpoint. But Bert, what percent of earnings does a REIT pay out to their shareholders?
they're required to pay out 90% of their earnings to shareholders. So they're not keeping a lot of it. They're not going to see too many low payout ratios here for the company. And there is one other fun thing when you're looking at REITs. While typically everybody will look at, every other company looks at earnings per share, and that's what we use in our stock screener. REITs use a metric called funds from operations, or FFO. That's where you'll take earnings per share. You'll make a few adjustments that will add back depreciation, add back interest. It'll really focus on those core items working to there. Typically, we're CPAs. We always love looking at your GAAP earnings that are auditable, but this is the industry practice. Every REIT has a standard way of putting together FFO in their financials. So we always feel comfortable doing it. And that is the right way to look at it.
Thanks, Bert. And yeah, so Omega Healthcare Investors, ticker symbol OHI. As Bert was saying, the S&P 500 ended up having a solid week. They were up for the week. Well, OHI, again, Omega, their stock is actually down over the last 5 days by 2.34%.
Interesting.
Bert, how has this stock even performed year to date?
Yeah, that's interesting. This stock year to date is down nearly 12% here. So it is bucking the trend of what is going on in the broader stock market. So you can definitely see those major signs of undervaluation and trending away from where the stock market is going. And on a 52-week basis, if we want to kick it out even a little further, they are only up 3%, which again, significantly trails the S&P 500 over the same time.
Exactly. And this is a dividend lovers stock right here. We typically don't chase yield. And we're not sitting here saying buy the highest yield stock. There's a lot of risks with a higher yield stock or REIT. And that is the fear of sustainability of the dividend and the potential future cut to the dividend. But we're here to look at what Omega looks like from the Dividend Diplomat stock screener, see if there's safety in that 9% yield.
Yeah, so let's jump right in. We'll look at the first metric. We'll look at the price per FFF ratio to see what's going on. So we gather AFFO from their last quarter, and we're going to annualize that. So in their last quarterly financials, it was 85 cents. You annualize it, that's $3.40 right there. Omega stock price was $30.86 at the time of the video. Divide that by $3.40. That gives you an AFFO ratio of 9.08.
Not too bad. I mean, again, showing definitely signs of undervaluation right there. You typically like to see something less than the S&P 500. Obviously, it's hard to find an AFFO ratio for the S&P 500, but I think this pairs up pretty favorably amongst the REIT space.
I would agree with that statement as well. You want to take over number 2 here, Lanny? You want to talk about the payout ratio?
I'd love to, Bert. This is the dividend payout ratio, brother. And we typically like something in the range of 40 to 60% as the perfect payout ratio, preferably under 60%. But we're talking about a REIT. And as Bert stated, just to educate everybody here, REITs normally or should and are required to pay out 90% of earnings. So when we take their annual dividend again, which is on a quarterly basis is 67 cents per share per quarter. So annually they pay $2.68. As Bert said in the AFFO ratio, they have a $3.40. So when you take 268 and divide it by that 340, they're actually at a 78.82% ratio from a payout ratio standpoint.
Fantastic. And I'm just going out on a limb here. I know obviously AFFO is slightly different than earnings per share, but there's still plenty of room there. You're not bumping up against the 100% ratio there. So that's always a good sign from there. Moving into that third metric, their dividend growth rate, their 5-year average is 3.06%. And they've increased, like you said earlier, for 17 years. So you may think 3% is not that great, but when we keep talking about the yield and how strong of a yield there is here, 3% looks pretty good, and it'll put for a very nice dividend compounding factor that we always like to talk about here.
And the one thing to keep note here, though, for Omega Healthcare is that they actually did not announce an increase during 2020, but the total dividends paid out in 2020 were greater than 2019. So that also counts as a year of growth. They only have, I think, one more quarter left of 2021 to increase their dividends. So the question everybody's wondering, is can they or will they? Based on that ratio in the second metric, it looks like they can increase it, even if it's only by a quarter of a penny if they need to.
But will they? I guess we'll have to find out here. That's the fun of it, right?
Right. So, Bert, what's that bonus metric, that dividend yield, the one that makes investors salivate and jump on things sometimes too quick?
Yeah, it's not 1%, it's not 2%, it's not 3%. We're going to jump ahead here. Their dividend yield is 8.68% at the current stock price. So you take that 8.68%, you add it into that 3% 5-year average dividend growth rate. Nice little factor there, double digits. That's what we like to see.
Not too bad for a REIT. Obviously, a 12% stock price drop this year obviously pushes up that yield quite a bit. Again, we're not sitting here to recommend, oh yeah, buy the highest yield you can in the book. But sometimes there are those handful of REITs or stocks that you do want to take a look at to see if the other metrics, kind of help make sense. So Bert, to kind of summarize here, do you want to go through some of these metrics?
Yep. Price to FFO ratio, 9.08. Payout ratio, 78.82%. 5-year dividend growth rate, 3.06. They've increased for 17 years, maybe 18. We're going to find out here in the next quarter. Their dividend yield is nearly 9% at 8.68% at the moment. So this is fantastic stuff. Lanny, what are you thinking with Omega here? I would love to hear your thoughts, and I'm sure the viewers would too.
Tell you what, I'm going to keep my eyes on Omega. This is a very good purchase if you have a Roth IRA or some sort of retirement account that is going to protect you from earning that dividend income from a tax standpoint. Hard to argue Omega. I mean, they're a beast in the industry, Bert. They have a market cap of over 7 billion, so they're not a small REIT player by any means. 17 years of dividend growth. They've kind of been through a few things, especially a financial crisis, which probably impacts REITs quite a bit. And they're in the healthcare arena, which you would think that occupancy should be very high right now.
Yeah, and that's what jumps out to me as I went over to their website as we were researching this here. They have nearly 1,000 facilities across the country here. And if you look at the states where they have some of they do by the different colorings, obviously the darker shaded the map, the more facilities they have there. Midwest, Ohio, shout out, got to give the love there. PA, Michigan, heavy in Florida, in Texas, in California here. They're looking, I like the trend in the sector they operate in because it's going to become such a big need going forward.
Yep, I couldn't agree more. And obviously for the snowbirds, 130 plus facilities in Florida. I know a lot of the retired individuals do migrate down there. So it seems like they're concentrated in the right area as well.
Nope, that's absolutely right. And
don't hate the player, hate the game.
It's true. And I mean, chances are you see them popping up in the suburbs near you. There are plenty of elder care facilities popping up around us as well. So I think you're right, though. I'm going to be watching them as well. Maybe put some money into the Roth to buy some shares, initiate a position here, get a head start on it. One other fun thing about this company is they pay a dividend in August, so they pay in a nice off month. So it's always nice to kind of get your dividend income not in the third month of the quarter when most of the companies pay.
If you're an Omega Healthcare investor, definitely give the video a thumbs up. We want to see how many of you guys are out there, because I'm assuming that there are many more than we even think that there are.
But please, too, even if you're not an Omega Healthcare, please also don't forget to give this video a thumbs up.
shameless plug. But, again, that's Omega Healthcare investors. Ticker symbol is OHI. Yielding almost 9%, but the payout ratio shows that there's still room to not just pay it, but even grow it. They have one more quarter to keep that dividend growth streak alive. Mm-hmm. So the question is do they keep the streak alive like Taker, and do they go for 18?
Let's see. Let's hope they don't run into Brock Lesnar this year at WrestleMania then.
Oh my gosh. Yeah, is Brock going to actually turn around to the Taker and say, rest in peace?
And if there are other stocks you want us to take a look at here and just feature on our channel, let us know in the comment section. It helps us find some of these great undervalued ones, everybody.
Exactly. And guys, this is what it's all about. It's all about putting the cash to work. buying assets that produces income for you for when you sleep, when you don't have to work. It's about building up that portfolio. That was Bert, and this was Lanny from the Dividend Diplomats. Over and out.